We're live. Hey, everybody. Long Doan here with LabCoatAgents, and today we got Mark Kohler. I think many of you have probably seen Mark, especially during the COVID PPP and all kind of good stuff. So today we got Mark on, and he's going to be showing us how to structure your business correctly, some awesome tax strategies, not how much you make, it's how much you keep, right?
Long, thanks for having me. And everybody, hopefully you'll just give me 10 seconds to tell you how important this little stream is. Try to set down what you're doing. Hopefully you're having a little sandwich or you can come back to this. Mark Kohler here. I am a tax attorney just for Main Street America. That's you, the realtor, the broker. I love LabCoatAgents. I love it when they give me a chance to share with you some awesome principles. If I don't save you in this webinar at least $5,000 in tax, I've screwed up. I know I can save you that much in taxes. And you may say, well, my accountant's got it. No, they don't. I want to tell you what your accountant's probably going to screw up. You're the captain of your ship. And there's just 5 or 6 strategies you need to know. So Long, freaking, we're going to do it. It's going to be good.
Yeah. Let's start off with, let's say if I'm an agent and been doing for a while, just getting started. Well, how should I structure my company? Should I be an LLC, an Escort? What should I do, Mark?
Well, we all thought it was so easy. We just click on LegalZoom and go, click, click, click. I'm an LLC. I'm done. Wrong. People, LLCs do not save taxes. Now, there's still a good structure, and we can work with it to grow. But I have to introduce, now hang tight. You may think this is too complex. It's not. You're going to be head and shoulders above your own CPA or attorney within the next 45 minutes. I'm not kidding, people. You're going to love this. Now, I'm going to go to my whiteboard, and we're going to just lay out what I call the trifecta. We're diving right into this, people. We're not wasting time. Now, I will throw this out. If you're like, oh my gosh, this is too much. I need time. I need a bowl of popcorn and a Diet Coke. I have my back to school special. I do it once a year. It's already over, but I'm leaving the link alive. I'm not trying to sound too salesy, but I did. I talked to Tristan and Long. Tess is in the back room there. She's going to put down a link. I'll tell you more. It's a few $100 to get lifetime access to a lot of my videos. You get some books in the mail with a backpack. It's tax write-off. And then you can learn some of these things while you're at home. I know that sounds crazy, but you're going to love this. So we'll come back to that, but I just want to let you know you can get this information and dive deep when you want it. Okay, so Long knows this. When Long met with me, we laid out a diagram for him. We get a 1-hour consult with one of my attorneys, so you get the same thing. We set up the trifecta. Now what this is you have your family trust down here, married or single, divorced, remarried, whatever. You got to have an estate plan where everything falls. So we're saving taxes, everything rolls down into your 1040. That's what we want. Now the trifecta is this structure where we deal with operations over here and holdings over here. Now you may, sorry, I've got a little note there. Sorry, my handwriting is not that bad, people. Holdings, okay. A little pop-up came and I didn't want to deal with it. Okay, so operations and holdings. So when you're a realtor broker, this is the biggest mistake people make. They try to run everything with one business in the middle. We don't want to do that. We want to have an operational entity. Some of you may start out as a sole proprietorship or an LLC, but ultimately you're going to be an S Corp. And we're going to explain why in a minute. It's going to save you thousands of dollars, and your accountant's probably screwing it up. The other side of the equation is where we put our rentals. My realtors and brokers retire on rentals. We're still going to build out your solo 401k, your backdoor Roth IRA, and we're going to build up wealth in a self-directed format with real estate. But I want your LLC over here owning your rentals. And then over here, we're going to run the business. It's all owned by your trust, and a river runs through it. That's it. That's the trifecta. Now we just expand on it. So I want you to run your operations in one entity, hold your rentals in another entity, and it all flows down to your trust or into your 1040. We're going to save taxes. We're going to have better asset protection. And if we build with this foundation, everything else becomes easy. Long,
so if I was an agent, what's my first step? I'm a sole proprietor. I don't have anything set up yet.
Okay. Okay. If I'm a brand new agent, then we got to do our left side, right side. I'm not going to worry about the trust initially. I'm not going to worry about rental properties initially. Let's not overdo it. The brand new agent, what I'd like to do, I know this sounds crazy, is start out as a basic LLC. Now, you're not going to save taxes with that, but you're started out as a sole proprietorship. Then, when you make just the right amount of money, I can elect it back into an S Corp. So we want to set up an entity. It is almost like S Corp insurance. You can't call me up at the end of the year and go, hey, I made a bunch of money, make me an S Corp for 2020. It's too late. But if you were an LLC all year, I can backdate it into an S Corp. Now let me explain why, Long. Is that okay? Let's do why. Now, if I'm just a plain old LLC, if I bring in, let's say I bring in 80 grand, and I'm doing this with my closings. This is my 1099 from the broker. I bring in $80,000. And let's say I write off 30,000 in write-offs. Cell phone, auto, family, rent, marketing, blah, blah, blah. I write off all these expenses and I net 50 grand. Okay? So you're taking home maybe about 4 grand a month. That might be a brand new agent. Now you think, okay, that's pretty cool, Mark. Maybe 30 grand in expenses is a little high. Maybe we bring it down. But if you're going to net 50 grand, this is the break even, 40 to 50 grand. With an LLC, you're going to pay FICA. This is the F word, FICA. Now, I don't know what F word you were thinking about, but I hate FICA. What the FICA is, that's Social Security and Medicare, is 15.3%. That's going to run you $7,500. Then you're going to pay state tax and federal tax. Now, if you're lucky enough to be in a state with no state tax, lucky you, but this adds up quick. You could be as high as 5 to 10%, and then maybe 20% here. We're looking at 20, 30. This could be 40 to 45% of your income gone in the first year. And you're like, what the hell happened? I'm a brand new agent. I made 40 or 50 grand, and I'm going to lose 30 to 40% of it. Now, if you're married and there's another W-2, or you have a part-time job, and all that goes into a bucket and your bracket goes up, you could lose even more. So the strategy is the S Corporation. Now, hang tight, people. I know your accountant might be going, oh, you don't make enough money to be an S Corp. Hang tight. Let me show you how the math works. And I'll say this right now. Every realtor, broker, contractor, plumber, electrician, accountant, lawyer, online marketer, engineer, architect, anybody that's a 1099 sole proprietor, which is you, those clients of ours that make more than 40 grand a year, they're an S Corp. And we don't get audited for that. In fact, it reduces your chances of an audit. So here's what happens. You make the same 50 grand and I split it. I split part of it into a W-2. In this situation, I might do 25 grand in a W-2 and 25 grand in a pass-through. It's called kind of a K-1. I still took home 50 grand. You don't have to wait around for a paycheck. Costco has this service for S Corps. This is so freaking easy. You take that W-2 on paper. After you pay yourself, you just do it throughout the year. I just saved, I pay my FICA here, but I saved 0.53 or 15.3% of 25 grand because I cut it out. So I just cut this in half. I just saved $3,250. Would you like a $3,000 paycheck? This is just getting started. And the more money you make, the more you save. So I'm going to shut up here. So, and then any questions you have Long, they're coming in. People, the point is, once you make 40 to 50 grand, I want to get you into an S Corp. And if we're here in 2020, I want to try to get you in. Some of you are like, well, I'm an LLC, but I can backdate you into an S Corp for the whole year and start saving FICA on that money. That's what I want to do. That's tax strategy number one. And some of you that are making hundreds of thousands of dollars, your salary could be totally jacked up. Okay, I could keep going. Long, what do you think?
So when's a deadline that you can backdate somebody to change from an LLC to an S Corp?
Okay, here's the hard part. And this is going to be good news for some of you and bad news for some of you. This is someone with an LLC. This is for 2020. Let's say you were just set up an LLC last year or the beginning of this year. I know it's a crazy year with COVID, whatever. This is some of you that are just a sole prop. You're brand new. For those of you that had an LLC, we're sitting here right on the cusp of October, which is fourth quarter. And if you say, Mark, I've already made 50 grand net. I probably did 60, 70, 80. I've had a decent year. That's net. So you maybe brought in 100, spent 20 on expenses, you net 80, whatever. I can backdate you into an S Corp, and the deadline when I want to do this long is I want to get it done in December because I have to issue you a W-2 for the year. Don't call your accountant in March and go, yeah, I watched Mark Kohler. He said I could be an S Corp for 2020. You missed the deadline because you have to take a salary. So we're slammed in November and December because everybody that's like, okay, I did it. I need to get my S Corp election done. We charge 150 bucks, 150 bucks, and you're an S Corp. And then we issue the W-2, couple $100, and then quarterly next year, you're gonna be on a regular routine of issuing these payroll reports. So there's no, the deadline's about December. Now the bad news is, for some of you that are a sole proprietor for 2020, we have two options. We could make an S Corp for the fourth quarter. If you're gonna make 30 or 40 grand, you got a big closing or two in the pipe, you think it's gonna be a huge quarter, I might do that. That's option one. Option two is, and then what had happened is you'd be a sole prop for 9 months, and the last 3 months, you'd be an S Corp. Option two is, let's talk in December, and let's make sure 1/1/21, you're set up as an S Corp or an LLC moving forward.
Okay. So we got a couple questions come flowing in. One is, why don't you start out as an S Corp right off the bat? Why wouldn't you?
Okay, good comment. Okay, some people that are like, okay, so let's say I've got two examples. I'll do this way. I've got two people, A and B. So I'm gonna use Long as A, and I'll use Tessa as B. So Long comes to me and goes, Mark, I'm a brand new agent. I don't know how much money I'm gonna make this year. I got some good plans. I got a good coach. I think I might make 50 grand. Well, I want some insurance because if Long makes it, he can't call me in September and go, dude, I did it, make me an S Corp for the whole year. Can't do it. I can't backdate him. So my insurance for Long, because he's not sure if he's gonna make 50 grand, I'm gonna start him out as an LLC and see how it goes. Now, the reason why I don't wanna go a corporation right out of the gate is because I've gotta do a corporate return and I've gotta deal with payroll. I don't wanna do that for Long unless he makes the money. Now, Tessa, she's like, Mark, I've already made, I made 80 grand last year. I'm on track for 100 grand or more this year. There's no question. Oh, then I go straight to a corporation for Tessa and I just go right into it. Why screw around with the LLC? And by the way, it's the same cost to set up both of them. At our office, it's 800 bucks. You get an hour with a tax attorney building your diagram. Now you shop around, I don't care. But you should get someone walking you through this of why the heck you're doing this and how it fits in your overall picture. And we build a diagram for everybody. 800 bucks, you get it set up in any state in the country, same price, LLC or S Corp. But we want to set up the right one for you so we don't increase your costs later if you didn't need it.
Okay. So to do all this, when you say the net about 40 to 50 is when you should go to an S Corp, right?
Yes.
I know many agents probably are newer, maybe especially the new agent. They don't even create like a separate checking account to write off their expenses. They just dump it onto their personal account. What do you recommend that people should do, you know, when they don't have an S Corp set up yet or even an LLC set up yet when it comes to even checking account to write off expenses?
Okay. Now, I saw a couple comments too. When I say insurance, I'm not talking about traditional insurance, and I'm going to answer that long, but umbrella insurance is not the same as a freaking LLC. And I know some of you in California are like, it's $800 a year. Mark, you're crazy. The self-employment tax on $50,000 could be $7,500. Let me see. Save 3 grand, spend 800. Now this is hard math. Let me see. Spend 800 to save 3 grand. I think the math's in your favor. So if you're in California, don't think you can cut corners and go, oh, I'll just buy more insurance. Umbrella insurance is cheap because it pays out less than 1% of the time. It's not made to cover what your regular insurance doesn't cover. It's excess liability insurance. Be careful. Now, Long brings up a good point. Someone says, I'm brand new, Mark. I don't need an LLC. My daughter just passed the realtor exam in California. She sits for Utah next week. She's excited. I love that my daughter's becoming a realtor. I love the industry. I've been speaking to realtors for 20 years. What I've been teaching right here to you, I've never had a client audited for taking too little of payroll, ever. So if your accountant says, oh, Mark Kohler's too risky, really? I'll sign your return. We'll walk you through it. And if you get audited, I'll pay the penalty. We've had that policy for 20 years. Never had a client pay more FICA than what the payroll we determine in advance. Now, again, for all of you that are brand new, just get a bank account, be a sole proprietor. If you don't want to do the LLC, that's fine. Maybe between now and the end of the year, track your expenses as best you can, maybe in an Excel spreadsheet. Let's see what happens. But I really, really encourage you, if you're going to be a realtor, and you know that's going to be your career for at least the next 5 to 10 years, get an LLC set up for January 1st, 2021. Get up to speed on these strategies. It's going to make you look more legit. You'll get a tax ID number. You're going to have a more formal company. You can start building corporate credit. You can start branding a name that no one else can have. There's a lot of benefits to having that LLC, not just the ability to turn it into an Escort when you need it.
Okay, so then if you say it's both the same for an LLC and S Corp, if they start with one and transfer the other, is it an additional $800 at that time? How does that work?
Oh, no. So let's say you set up your LLC and then we find out it's time to become an S Corp. We charge $150. That's it. Now, that's what you're paying for the insurance. Because see, let's go back to the AB example. If Long isn't sure he's going to make 50 grand, if I do an LLC for him and he doesn't make the 100 grand or the 50 grand, then it's just a 1040 tax return for him and a Schedule C. Done. Easy. But if I did the S Corp, it's going to be probably $1,000 to $1,200 for an S Corp return, and he has to do payroll. So it's going to cost him about $1,500 to do an S Corp tax reporting. Well, if he didn't make 50 grand, I want to save him the $1,500. So to have $150 hanging out there for when the time is right, that's a good gamble for me.
Okay. On this same topic, a lot of questions. So I want to make sure we get to a lot of different topics. But what somebody's asking about the difference between a C Corp and an S Corp.
Yeah, I saw that comment. Someone said I'm already a C Corp.
Yep.
In my book, by the way, I've got 3 different books and a workbook. I'm the #1 selling author on Amazon for small business tax strategies. I say that humbly. It took me 15 years to get here. My book, The Tax and Legal Playbook, 2nd edition, you'll get it in my back to school special. I have a whole chapter on why you don't want to be a C Corp. And I put my money where my mouth is. Now I'll just explain it right here. If I'm a LLC, I pay FICA on everything. We just talked about it, 15.3%. If I'm a C Corp, I pay corporate tax on any profit, 21%. If I'm an S Corp, on the profit, there is no corporate tax and no self-employment tax. So I solved the problems of these 2 entities, but I have to take a reasonable salary. Now, for one of you that's a C Corp out there, you go, well, Mark, I don't have profit. My accountant zeroes it out. I go, okay, so you have that many expenses that you have no profit? Well, he gives me a bigger W-2 so I don't pay corporate tax. Well, if you take a bigger W-2, what are you paying? Well, you're paying FICA. And you're like, well, I don't want to pay that much FICA. Okay, don't. Well, then you got corporate tax. Well, I don't want to pay corporate tax. Okay, take more FICA. That's the mess of a C Corp. People, I've been doing this for 20 years. You're good at selling homes. You know the Rep C backwards and forwards. I know tax returns and small business structuring backwards and forwards. 1 out of 100 small business owners might be a C Corp. And I put my money where my mouth is there. If someone's got you in a C Corp, get a review. Please give us a call. Do a half-hour review and go, what would my tax return look like if I converted to an S Corp? You can convert for $150. So people, be careful of the C Corp. Hell no. No way. I'll fight anybody on it. Like a rock store.
Salary. Next, Mark. The next question. I know you gave me the Mark Kohler salary matrix, I think it was called, something like that.
Yes.
What's
Okay.
a reasonable salary, someone's asking?
Okay. Now for you folks out there, and I know they're on there, LabCoatAgents, there's a lot of successful agents. Okay. So if some of you are just listening, waiting for the good stuff. Okay. For those of you that are making over 100 grand a year, okay, zoom in, pay attention. You're making over 100 grand a year. You young agents that are going to be doing that, watch, because here's what's going to happen. We do our trifecta, and you have your Escort. You're like, Mark, I got it. I already have it. You bring in 150 grand. You're like, okay, cool, 150 grand on my 1099. Then I have, let's say, 50 grand in expenses, if we're lucky. So 50K in expenses. That's a lot of expenses. But we net 100. Now I could change the math here and say, let's bring in 200, have 50K in expenses and net 150. It doesn't matter. Let's just do the 150. So you're going to net 150. You're taking home about 10 grand to 12 grand a month. All right, cool. What's your salary? In a 150 scenario, I'd probably take a salary of about 33%. So your salary would be a W-2 of 50 grand. Your pass-through would be the 100. Let me say that again, people. If your gross income is 200K, your expenses are 50, and we're just getting, I'm going to still give you 5 more tax write-offs, but this is tax strategy number 1. If I net 150, I'm going to split it. I split 50 into W-2 and 100 into K1. You still take home 150. We just call it on paper 2 different things. Now you just saved 15.3% on close to 100 grand. Now it starts to phase out on the first 130, it goes down to 2.9. So it'd be 50 plus 30, 80, 15.45. You probably save close to 11 grand in self-employment tax with that strategy, probably 12. Now you say, well, Mark, how do you come up with that? So I've come up with the Kohler payroll matrix. You can Google it, it's out there. I write for Entrepreneur Magazine. They got it everywhere. They're like, Mark, we love it. The more money you make, that's your net income. The more money you make, the lower your payroll percentage is. So your payroll percentage actually goes down as you make more money. So if you're making 100 grand net, I might do a payroll percentage of 40%. You make 150, 200, 300, 400. I'm going to go down to 35, 33, 25. We usually baseline it out at 20%. You want what's interesting? Long, you're going to love this. 3 weeks ago, Wall Street Journal, page 17, they buried it in there. Joe Biden, they looked at his tax return for the last 2 years. Joe Biden has an Escort. He made $13 million over the last 2 years in book sales and speaking. His W-2 for those 2 years was $750. So he was making about $7 million and taking a payroll of about 350 grand. They estimated he had saved FICA of over $500,000 because Joe Biden was doing the Escort. Joe Biden's doing this. Every doctor, dentist, realtor, broker, engineer, attorney, CPA, we're all doing this. This is not high risk. You reduce your chances of an audit. Joe Biden is taking a 5% payroll allocation. I wouldn't even touch that. If I was doing his tax return, I'd be like, dude, I don't know. This is not high risk. It's freaking basics. All right.
A couple of your diagrams start at the bottom with trust. A few people have asked, explain that. What's context?
Okay. The trifecta is I want all of you to have a revocable living trust. No tax ID number, no annual maintenance, no tax return. It's the trust that owns all your assets. It owns your home. You see it all the time, people, right? People have a revocable living trust owning their home. The trust owns the LLC. And I see the pass-through question. I'll come to that. And the trust owns your S Corp. Your trust is the beneficiary of your solo 401k or IRAs. Your trust is the beneficiary of any life insurance. Everything flows down into your trust, which includes a will, Power of attorney, if I'm a vegetable, pull the plug, funeral and burial instructions, and you update it once every 5 or 10 years. And especially if you're in a second marriage or a divorce and you've got your kids, his kids, who knows what, you got to have a plan. So the trust, we charge $1,500, any state in the country, to get your entire estate plan done, single or married, done. Then we transfer this stuff to be in your trust. That's called funding your trust. Some of you already have a trust and nothing's in it. It ain't worth anything. You got to get it funded. And then it all comes down into your 1040. So the Revocable Living Trust is an estate plan. And if you want to just go on YouTube and type Mark Kohler Estate Plan or Mark Kohler Trust, you'll see several videos. It's another chapter in one of my other books on just, in my back to school special, you get all the books at like an 80% discount. It's only for LabCoatAgents right now. Tess has put the link below. If you don't like the little package I send you, send it back, give your whole money back. And you have lifetime access to all my little videos. I have 30, 45-minute videos on every one of these topics. And I'm just as engaging as this. I hope you find it engaging. Okay, now someone said, what the hell is pass-through? Can I answer that real quick, Long?
Yep.
Pass-through is an S Corp where the W-2 is your paycheck on paper. Let's do it this way. This is really what it looks like. Here's my S Corp. Anytime I want money, I take a draw. And there's agents, this is how Long does it, right? Long, you can tell everybody how easy it is. Whenever Long wants money, he just takes it. He transfers it to his personal account. Then he goes buys grocery and underwear or whatever. He was trying to write off Victoria's Secret as an entertainment expense, but they took away that write-off. So it's tough. Okay, now he takes a draw and then he does a W-2 on paper. He doesn't wait for a paycheck. And then anything else that falls out the bottom is called pass-through. There's no corporate tax on pass-through and no self-employment on tax on pass-through. Also, under the new legislation, hate Trump, love Trump, I do not care, but GOP threw you a bone. You get 20% deduction on all the pass-through. So if we do a 100 grand draw, let's say you bring in 125, you have expenses of 25, you net 100 grand. I do a payroll of 40, a pass-through of 60. You just saved 9 grand in the F word, FICA. I just saved you 9 grand right there. Then you get a 20% deduction on the 60. That's another $12,000 write-off. So you're only paying tax on 48 grand. Plus you saved 9 grand in FICA. Someone just commented, love the QBI. Gee, I hear you. Realtors are the only ones that get the QBI, which is this 20% deduction. You get it unlimited. Unlimited. Crazy.
So, obviously, because your company, your team of both CPA and attorney can really help us structure and save money and do it correctly and liability and all that. So do you service all different states? People are asking if they're in Missouri, they're in California, work with them all.
This last week, I set up entities in Tennessee, Missouri. That's funny you bring that up. It was the Kansas City side. I'm sorry, the Missouri side of Kansas City. All 50 states, we're setting up entities from California to Florida to New Jersey to Maine to Massachusetts, Hawaii, everywhere. Now, our accounting firm is pretty busy. We can't handle any more clients, of course, before the end of the year. We've got extensions are due on personal returns in the next 3 weeks. I've still got to do my return. Then we'll gear up for next year. We can set up your entity, do your tax plan, review your tax return, and then give it to you. And you go, okay, I'm going to have my accountant implement this. Or you may shop for a new accountant. Might be able to refer you somewhere. Or you can come to our firm. We just can only grow so fast. But I have 5 lawyers. We're out about a week for an appointment. You get an hour with a real lawyer opening up a case file for you. You pay a retainer of maybe $300 or $400. If we set up an entity, we apply it to the entity. So another $500, you got an entity and a consult with a tax lawyer going through your tax return. We do all 50 states. Don't worry about it. And my education, the little back to school special, try it out, watch the vids. If you're not blown away, I'll give you your money back. I don't want Long calling me pissed off that one of you agents is mad. So I will take care of you. what is it, 300 bucks, 250? I think it's
249 with the extended discount.
Yeah, 249. It's normally 900 bucks if you go buy all that on my website. And people did last week. I had 5 sales last week where they paid 900 bucks. The back to school special is 249 for you just till the end of this month. Okay, I don't want to, this is not an infomercial. Okay, do you want to get into the structure more or 5 other write-offs?
Well,
What's that question? Do you recommend creating the what? I didn't see that.
creating S Corp in the state that you work in.
Oh, everybody, you set up the S Corp in the state where you live. You do the, okay, now let's get into rentals just for a minute, because I love rental property as your next tax strategy. Let's just talk about that. Is that okay, Long?
Yep, because the other question I would like to hear as well is write-off. What can you write off later?
Okay, I'll just say this about rentals. The rentals create a huge write-off depreciation. So Long, on that note, you know the power of the big D, and I don't mean Dallas or divorce. Big D and its depreciation. Realtors and brokers get the best benefit of depreciation. I don't. So that's a big write-off. I want all my agents buying 1 rental a year or a part of one. That write-off comes in and reduces your other income 100%. So number 1 tax strategy is look at the S Corp. Number 2, buy a rental. This is going to be your retirement, and it's going to create pass-through losses that offset the pass-through gain from your S Corp. You set up the S Corp in the state where you live. If you live in Missouri, it's a Missouri S Corp. If your rental's in Tennessee, it's a Tennessee LLC. Now you have asset protection for your Tennessee rentals. You have asset protection for your Missouri operations. You have a firewall between the two, and it all flows down into one, and a river runs through it. Brad Pitt, right there. Ladies, focus. Okay, now this is your trust, your 1040, and your LLC is in the state where your rentals are. Your S Corp's in the state where you live and operate. Another Facebook Live. Okay, I'm going to do you. Okay, Long, you tell me what to talk about.
Yep, so before we go to that one, on the same topic for investment, how much exposure should it be in LLC for each property?
Okay, I've got 4. Now this is deep. And if you get, I know that some of you are going to buy that little back to school library. I've got about 40 videos in there. You're going to want to go watch the one on asset protection for rental property. I've got 4 different sections: tax planning, business planning, asset protection, and wealth building. I've got several videos just on self-directing, how to write off your kids, when should I pay my spouse, how do I protect my home. I have a whole video on how to protect your home from a lawsuit. That's in the library. Now there's a video on how to protect your rental property. Here's a little bit about it. So over here is your operations. Here's your S Corp. We're not going to worry about this side. Over here, I have 4 options. I could do 1 LLC and put 3 or 4 rentals in it. And my rentals might be in 3 or 4 states. So I've got a Texas, I register it in Arizona, and I register it in Florida. And I've got 5 properties, or 4 properties, let's put 5. I have 5 properties in 1 LLC. Or I could say, well, I'm going to set up a Texas LLC, a Florida LLC, and an Arizona LLC. I'll put 2 properties here, 2 properties here, and then my 1 Texas property here. They're all LLCs. So Long, I'll ask you, what's the benefit of option 1 versus the drawback of 2?
1 tax return, a lot easier to keep track.
Simple, cheaper, easier. This one is more expensive. But now let's look at what's the pro of option 2 versus number 1. Do you know?
Liability.
You're smart. See, we have firewalls between these states. That's lawsuit protection. If this tenant falls down the stairs and sues me, they can only get at the other Arizona property. All of my assets in Arizona are in 1 bucket, protected from Florida and Texas. Now, if I come over here and there's a problem with an Arizona property and they sue me, they can get at all the other properties because all my eggs are in 1 basket. Now, here's the point. I don't set up an LLC for every rental. I look at what states you're in, how much risk is involved. Are they low-income rentals, little grandma, easy, no-risk rentals? Are they huge equity? How much are they worth? It's not quantity, it's quality. Now, I know some of you want to just go click, 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 go to LegalZoom, set it up, and be done. That's not an LLC. You need to have the guts. We need to deed the property over. Don't worry about the due on sale clause with the bank. This is what my attorney would walk you through when they go through and set up your entity. So you know why you set it up, where you set it up, how to maintain it, boom, bada bang. If we do 2 or 3 entities, we always discount the second or third one. So that way you're getting a plan, because we want you to come back and every year review what you set up. Now, the other option, number 3, is to set up a series LLC, which is a good in about 15 states. I have a table in the back of my book that goes through all the states, what type of homestead exemption and series LLCs and COP entities and blah, blah, blah. But you can have baby subs. Now, in this example above, Texas has series law. So I could have a Texas series LLC and have as many little baby subs as I want at no extra cost. But Arizona and Florida, I can't. So the series works in about 15 states. I like it. It's good if you're in a state like that. The 4th option is for my heavy hitters. They might have $1 million worth of equity, 10 plus rentals. We'll set up a holding company out of Wyoming. I can hide you, complete privacy. No one knows you own it. It's called a COP entity. And the COP owns all your other LLCs. Now you may say, well, that's expensive, Mark. That's another level. If you've got $1 million worth of real estate, buck up. That's okay. We want to protect it. So we do this double layer protection. This is the option 4 for my clients that have really built up a portfolio. Some of you are watching. Ask how your lawyer set it up. Is your name on public record? Are the deeds everywhere they're supposed to be? Does it flow? Do you have asset protection? Are you getting the flow through losses? Your accountant and lawyer should be able to answer these questions like this. You know more than half the accountants out there just watching for the last 30 minutes. I'm not kidding. I teach this class more to CPAs around the country than to realtors.
So after watching all of this and buying your library and all that good stuff, they want to call to schedule with one of your attorney. What numbers should they be calling, Mark?
Okay, if any of you want an appointment, now again, you can meet with one of the tax lawyers, Jerem, Kevin, Lee, Christy, who does a lot of our international stuff too. She's awesome. And Jerem, Devin, Lee, Kevin, and Christy. We have 5 attorneys. We're trying to hire a 6th one right now. We're in the interview process. They're out about 10 days max. Be patient. And the paralegals can get your entity going if you kind of know what you already need, and then schedule the appointment for the follow-up and training. Call this number if you'd like. Again, I'm not trying to be infomercial-y. We're going to hit, we got 3 or 4 other tax strategies I want to hit. Call, I'm just going to give you the local number, 435-586-9366. Now, the call is not free. Now, if you want to just interview us, we do 15-minute interviews, but we're not going to advise you or guide you. We don't do free consults. I'm sorry, but you schedule an hour, be around $300 or $400. That's the retainer. And then if you do the entity, which is $800, if you say, well, I know I need an entity, I know I need an estate plan, we'll apply the retainer to whatever service you do. If you say, I'm not going to do that, well, at least you got good advice, a diagram, and a review of your tax return. So you pay for the hour, and if you decide to do the entity, we apply it. If you try to do the estate plan, we'll apply it. Many of my clients get out for less than $1,000 because we set up the entity plus filing fee. In most states, it's around $100. You might have us be the address. We have mail forwarding. We have a whole privacy strategy. I have videos just on privacy. You're going to love it. Okay, that's our number. All right, Nick, should we do a tax strategy?
Yeah.
What do you want? You name it. Home office, kids, auto, dining, travel. You get to choose.
A lot of us work from home, so that'll be a good one. And the next one, when COVID's done again, we travel a lot. I know me; those are the 2 biggest write-off.
You said auto and travel.
No, I work at home.
Work at home. Oh, okay, that'll be easy. I saw someone talk about auto.
Sure.
Okay, here's how. I'll just hit home office. All of you should be taking home office. I'm going to hit the summary real quick. Again, I have chapters in this and little videos. Make your accountant watch the video. If you have an accountant that says home office is too risky, get rid of him or her. I don't care if it's your sister that does your taxes on TurboTax in the basement for spaghetti dinner. That is not saving you money. Okay, you got the standard. This has been around for 50 years. You take a percentage of your square feet of the house. How much is the house of your square footage percent of the home office, 10%, blah, blah, blah. You multiply it by the mortgage or the house payment and the mortgage interest and the utilities and da, 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 da. That's the standard way to do it. Now, the rule for years was it had to be your exclusive place of business, and you couldn't use it, and it had to be your primary, exclusively used in the house for an office and your primary place of business. That was the old rule, and everybody hated it. Because if you went in there with your underwear and returned some Facebook messages, apparently you blew the rule. Okay, so what they came out with was a simplified version, and then there was a big court case in the last 4 years that came up with the admin. Now, the simplified version is I can get $5 a foot for up to 300 feet. Now, in the movie The Accountant with Ben Affleck, have you seen that long?
Yeah, except he's technically not an accountant, but yes.
Yeah, well, he was a CPA. He was so smart. Okay, so Ben Affleck in the movie The Accountant, he was also an assassin, little stud. I want to buy every gun he owned. Okay, so Ben Affleck in the movie, in the first 20 minutes, he had that little farm couple come in, and he goes, "Where'd you make that necklace?" "Oh, I sell it." "And don't you have a home office?" And he walks him through the home office. He said you could write off up to $1,500, 300 feet, da, da, da. He gave him this rule on the movie. I was like, dude, I love it. The writers nailed it. This is $1,500. It's a no-brainer. All my clients take it. You can use it on the rental side or your operation side. But you say, well, Mark, I have another office down the street. So a doctor up in Maine, or it was Connecticut, about 3 years ago, sued the IRS and said, hey, I come home at night and I work in a freaking home office. It's not my exclusive and it's not my primary, but I have a home office and I deserve the freaking write-off. So he went to court and the district court said, you know what? You deserve it. You get the admin usage because you go home to do admin work. You can take either one of these write-offs. They were like, sweet. So all my clients are no longer afraid of an audit. This means you have the audit, the admin exception, and all of you should take this and love it. Okay.
Auto. We all drive. So lease, loan, mileage versus whatever.
Okay. You have 3 options with the auto. I'm going to start with the big 2. You can go mileage or you can do actual. Actual has a spinoff called leasing. And I'll say this is owning. Let's do that. Okay, now I've got my bag here. I have a calendar that comes out every fall. It sold out last year. If some of you sign up for my newsletter, you'll see it when it comes out. The calendar has all of your little tax data and important deadlines, little motivational QR codes every month. The mileage this year, I always have to look it up, is 57.5. What's the audit threshold for donations? I don't know. Bill Gates gave $1 billion. I don't think he got audited. Don't worry about it. If you donate legit, freaking take it. All right. Okay, 57.5 cents per mile. So as a realtor, if you burn 20,000 miles, you're going to have a write-off of, oh my gosh, 11 grand plus. That's a pretty good write-off. That's better than the car payment and gas. Now, GOP, hate Trump, love Trump, GOP, I do not care. I actually recorded a live video on Biden's tax plan. Your taxes will go up. I'm not trying to make you vote for Trump, but you better know what you're dealing with Biden. 11 tax hikes in Biden's tax plan. Watch my video on live, just YouTube Kohler Biden. And again, I don't beat up Biden in the video. I got some hate mail from some Trump lovers too. They thought I loved Biden in the video. So I got hate mail on both sides. Go watch it. Anyway, under the new GOP tax legislation, you can write off a car 75% of it in the first 3 years. The old rule, it took almost 16 years to write off a car. If you buy a vehicle under 58 grand, used, new, on credit, cash, whatever, you can even contribute your car to the business. I can write it off so much faster than ever before. So the depreciation in the first year can be $18,000 plus fuel. Pretty good. So here's the question. Well, Mark, which one do I do? If your car costs less and you're going to put on a ton of miles, go mileage. If the car is more valuable and you're not going to put on as many miles, go actual. Now, I've got a blog article on my website, markjkohler.com. Go over to markjkohler.com. And if you watch the video on the library, I go through all 7. But I have 7 rules of thumb. And if you go to markjkohler.com, go to the blog, and just type auto. There's a great little auto article where I go 7 rules of thumb so you can figure out which way to go. Now, if you go leasing, leasing's a great write-off. You get it, take 90, 100% of the lease payment if it's all business, but watch out for the mileage limits. Realtors do not do well with leasing because you put on a ton of miles. Be careful. Now, it gets better. I'm going to throw in a ShamWow towel and a Ginsu set of knives. Under actual, and I'll talk about your spouse, under actual, you can do the car or you can do the SUV and truck. And if it weighs more than 6,000 pounds, you can now write it off 100%. There's no limit. No limit. If you used or new, contributed to the business from your personal name, I do not care. Now, if you go actual, you can write off an $80,000 truck, a $60,000 SUV, the new Tesla truck, possibly. There's my Tesla truck. I'm in line.
The $58,000 limit doesn't count.
If it's $58,000 is kind of the limit where the car strategy makes the most sense. If you go more than $58,000 on a car, we're going to talk about mileage versus actual a little more. But on the SUV and truck, I don't care. No limit. Used or new. If you use it 100% for business, 60% for business, 80% for business, you could go out and buy a $50,000 truck or car, a truck or SUV on credit or cash, and I could write off 80% of it. If it was 80% business, that's 40 grand day one write off. Huge. Now, talk to your account. I have so many clients that call me after they buy their car or truck. Let's talk for 20 minutes before you go to the freaking dealership. Let your accountant be a part of the equation. The write-off is amazing. But anyway, study that article, watch the video in my tax and legal library on auto. I break it down, you'll freaking love it.
All right, travel.
Oh, someone said on auto, I write off my wife's car with mileage. All of my kids are a part of the business and I write off mileage on their vehicles. Mine, I do actual. You can have multiple cars in the business. And in our trifecta, I'll just say this quickly and then we'll maybe finish with travel, or I don't know. You said we were going to go over 5 or 10 minutes, didn't you? Okay, hang on everybody. You got your trifecta. In your S Corp or LLC, I want you to have your board of directors or board of advisors in an LLC. We put that in your LLC. LegalZoom doesn't do that. Who's on your board of directors or advisors? Your spouse, your kids. Now I'm writing off 1099s to the kids over age 18, and I'm putting kids on payroll under age 18. Now my kids pay zero tax under $12,000. I get a write-off, and my kids can create a Roth IRA and be a partner in my next LLC for a rental. I can sell that rental tax-free, and the money goes into my kids or my Roth or my 401k or my HSA. Huge topic. I'm sorry, I got carried away long, but this strategy of bringing family into the business includes auto. That's how my mind went there, because I write off the auto or a portion of it on all my kids, because all my kids work in the business even if they're away at college. They're helping with social media, marketing, accounting, and your spouse should be on your board. I'm not saying I put your spouse on payroll. I've got a YouTube video on that. Put my spouse on payroll. Google it and YouTube it. My video's #1. Okay. Travel. Oh, this leads into travel like Long asked. I want to travel and take my family who works for the business on the trip. Now I can write off 100% of travel. Dining is 50%. Auto is over here with the under mileage or actual. So think of this. I go to the airport with my spouse to go to a business trip. We'll talk about some good reasons for a business trip. I write off auto, mileage or actual on the way to the airport. I write off parking and the airfare and Uber and hotel as travel, 100%. I write off the food at the airport and wherever we go, 50%, the whole trip, because it's a business trip. Even if I'm not talking business with anyone, I'm there on a business trip. So travel is different than auto, which is different than home office, which is different than dining. You want to make sure you get those categories. And you're like, Mark, I don't want to worry about this. Then get a freaking app like the Quicken or the QuickBooks app on your phone to help you track your expenses, use a credit card or debit card for everything, and let your accountant know what the hell you're doing. You've got to coordinate this a little bit. People, you can make as much money saving as you do in a closing. Seriously, if I don't save you 5 or 10 grand, I screwed up, and that's a closing. All right, travel reasons. Long, I'm gonna have you help me. Give me some great travel reasons. 5 reasons why a trip would be a write-off.
Conferences like the LCA Live.
Woo! When is that?
Well, with COVID, we don't know when, but it was last June.
LCA Live. I'm going to write off the trip and I'm going to go to a conference. What's another good reason for a write-off trip?
Go to a mastermind event with a bunch of other real estate agents.
Okay, mastermind event. Someone said, I just saw the comment, looking for rentals. Now, shopping for rentals is not a write-off. Making a legitimate offer on a regular basis and closing once in a while, then the trip can be a write-off. So what I like to say is checking on your rentals is a write-off. So if your grandma lives in Duluth, Minnesota, then I want you to go to Duluth once a year and buy a rental and check on the properties. Midwest is a great place to take write-offs. Stay away from the coastal areas. And I have clients that love Dallas Cowboys. I know, Dallas fans, they drive you crazy. But they bought rentals in Dallas. So they go, every time they went to a football game, they check on their rentals. They were season ticket holders in a whole other state to Dallas football, and they bought rentals in Dallas. So every trip was a write-off. Buy rentals where you go. That way, when you're shopping or checking on your rentals, the trip's a write-off. I bought a rental right next to my mother-in-law. For years, it's still there. It's a write-off every time I go to my mother-in-law's.
Seminar, workshop.
What else? What do you think? What are you going to do with your board of directors?
Meeting, annual.
You're going to have your annual board of directors meeting with your family. Now, that may be a one day, but we're going to come to days of the write-off real quick. How about meeting with a customer? You're going to get a referral fee. You go to a family reunion and get a couple referral fees. That trip was a write-off, people. You might meet with a vendor, someone that you buy or joint venture with or products with. Are you selling on eBay? Would you have a marketing online business as well? I want you to have multiple businesses. Let's go back to our trifecta. I want you to have an Escort that you get your 1099 for your real estate commissions, but you're also a partner in a real estate development, LLC. You're also selling online. You're also doing hair. You're also doing drywall. Many of you don't know that Long does hair and nails on the weekend. You can book with him anytime you want. And all the revenue goes into his Escort. I have one Escort in my life. One Escort. That's it. That's all Long has. Long, do you have more than one? Nope. But if I call up Long and go, hey, Long, let's do a condo conversion on an apartment building. Short-term income, subject to self-employment tax. What saves me money? Escort. Do I want a new Escort with Long? No. My Escort partners with his Escort, and we set up a new LLC. Boom. 60% for me, 40% for Long. I think it's a good deal. It could work out. Okay. I didn't even get Long to smile on that. Okay. Now, I was talking about travel. Oh, the days of the week. Let me do this real quick. Long, you're going to love this. Okay, so this is Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. Ooh, I did it just right. 4, 5, 6. Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. Okay, now how long is the LCA conference?
Usually 2 days, Thursday, Friday.
Oh, ooh, okay. So look at this. Where was it last time?
Southern California.
Okay, so the LCA conference is Thursday and Friday. Okay, now I got to fly there. The day you travel to a business event or a check on your rentals, the day of travel for business is a write-off. So I get a write-off for Wednesday, and I did business on Thursday and Friday. And then I stuck around Southern Cal for Saturday and then flew out in the night. Write-off. I get to write off 4 days of hotel, air, food, dining, Uber, taxi, everything. Parking, valet, all a write-off 100% because I did business on Thursday and Friday.
Unless you also have an event on Monday.
Oh, Long throws it out. Now, Long is going to meet with a client on Monday. He's got a meeting, or he sticks around for another mastermind group on Monday. Takes good notes. Has his board of directors meeting. The IRS, and this is clear. This was in Wall Street Journal last year. It was a great little article. IRS is all behind this. If you do business on Friday and get stuck somewhere on a weekend and do business on Monday, the whole weekend's a write-off. So now I travel on Wednesday. I do LCA on Thursday, LCA on Friday, and I get stuck there on Saturday and Sunday, do a meeting on Monday, and then fly back on Tuesday. I wrote off the whole week. 7 days, 100%, because I did business on Thursday, Friday, traveled on Wednesday to get there, stuck there on Saturday and Sunday, meeting on Monday, traveled back on Tuesday. 100%. That's audit proof. That's legit. That's in everybody's freaking tax return. But again, your accountant doesn't know this if you don't explain it and account for it and plan your travel, your board of directors. Do you have minutes? We're doing an annual cleanup special right now. For those of you that your entity's a mess and all you have is one piece of paper somewhere and you don't know where it is, we do an annual cleanup special, $4.99, and you get a half hour with an attorney. I didn't even plan on bringing this up, but you shop around, talk to your lawyer, whatever, but $4.99 gets you a half hour with an attorney on your situation, any questions you have. We clean up all of your legal docs for your entity. And if we have to file something with the state, we do it. If there's a filing fee, we pass that on to you, but we're gonna clean up all the docs, and that includes an S election. Oh, I forgot to tell you that, Long. So if you need an S election, that includes that. So you get an S election, all your docs cleaned up, half hour with an attorney, $4.99. That special goes for another week or two. You get to the website, kkoslawyers.com. Now again, I'm just telling you what to pay for out there. That's what you should be looking for. If you want to use us, great. If you don't, fine. But I'm just trying not to be infomercially. Okay, one more strategy, you name it. It's your call.
Let's do the last one and we'll be done. And just remind everybody, if you haven't already subscribed to LCA YouTube channel, make sure you do, because this recording will be in there. Mark, give us the drop your mic last thing.
I've got to say it's self-directing. Self-directing, if you haven't heard about this. Let me tell a quick story on this. I had a client, she was a realtor, and I won't say what brokerage. She, out of Salt Lake. She called me up and said, Mark, I loved what you did at this workshop, an hour of this, whatever. Some of you may say, Mark, I want you to come to Minneapolis and teach a class for me. Fine, call me. I'll tell you a price and you may want to do it. I have clients pay me to go all over the country and teach classes to their clients or professionals, whatever. So she had her structure. She had her little Escort. She was a realtor making over 150 grand a year. She had a couple LLCs over here. And she's like, Mark, come teach my clients. And she goes, what? I go, what do you want me to teach them? Teach them that they can take their IRA or 401k and buy rentals. People are dying to do this. Peter Thiel started PayPal with his Roth IRA. It's now worth $1 billion. Mitt Romney has a $100 million Roth IRA. The list goes on and on. Your kids' Roth IRA could partner with you or your clients' entities, IRAs or 401ks. We set up an LLC and we buy real estate in our retirement accounts. This has been around for 50 years. It's called self-directing. We have a trust company. You can roll your money in. You can talk to your clients. Anyway, this realtor said, Mark, come teach that. I'm like, all right. So I came to the class. I showed everybody how to self-direct. She rolled out a bunch of rental property up on a whiteboard and a PowerPoint. And she's like, I'm taking offers on any of these properties. We're like, I'm making an offer. I'm making an offer. And they were buying rentals at their IRAs and 401ks. Because see, she was like, I'm sick of selling single family homes. I want to just help clients invest their IRAs in real estate. I'm like, okay. So I taught them how, 2-hour class in an evening. She showed a bunch of rentals. She was writing Repsy offers all night. Done. I was like, when do you want me to come back? She goes, come back next month. I'm like, all right. So 30 days later, she had the room full. I remember it so vividly. It was a broker. It was at their office. They were moving chairs around. There was people standing out the door and through a glass window trying to listen in as I taught the class. About 60 people there. I thought it went okay. I called her the next week and I go, when do you want to schedule the next one? You told me you wanted me to come 3 times. She goes, Mark, I can't have you come. And I go, why? What did I do? Did one of my jokes offend someone? She goes, Mark, I am so busy with everybody there making offers on real estate with their IRAs and 401ks and telling their friends, I can't have you back. People are dying to invest their retirement account in something better than the stock market, and they don't know how. You, as a realtor broker, need to know how to help people use their retirement account to buy real estate. I can't, on more than 2 hands of clients that have $100 million Roth IRAs with real estate developments, and thousands of clients with just 100 grand or 200 grand or 400 grand in real estate in their IRA. You can do it with your solo 401k and take a write-off with you or your spouse or you're single and buy real estate with your 401k and get a write-off to do it. That's the pen drop. And all of these educations in my back to school special if you want.
So you don't have to withdraw the money, pay the penalty, pay the taxes to go invest in this.
Nope, you're all good to go. And
it's, I believe the website I've been on before is called directedira.com.
Yes. In fact, I'll just do that one more time. Let me just give you the website. If you want to learn about it or get it going, you can set up an account right now for your solo 401k at directedira.com. We got videos. My partner has the best-selling book, the Self-Directed IRA Handbook, sdirahandbook.com. Study up on it. I've got all the videos in my tax and legal library. I've been doing it for 10 years. Once you buy the little library, lifetime membership as long as I'm alive. And I update the videos every year. So check that out, people. Long, thanks for having me.
And go forever. We didn't get to all the questions. I'll talk to Tristan. Maybe we might have to do this again, bring you back and get you all riled up and get everybody all excited.
Woo! Well, thanks again. And everybody, check out that back to school special. Give it to a friend or family as a gift. It's a write-off. And if you don't like it, I'll give you your money back. And thanks everybody for having me. Long thanks. I'll see you soon. We should do a year-end tax strategy call like the first week of December.
Ooh, that sounds awesome for sure. Tessa, let's set it up.
Yeah, that'd be good. And I've got workshops online between now and December. Get to markjkohler.com, kqslawyers.com. The workshops are $400 or $500 and 2 days worth of content. You'd love it. Okay. Well, thank you, Long.
Thank you, Mark. Bye,
Back to work.